This episode is brought to you by SmartVestor. Connect with an investing pro near you at RamseySolutions.com/SmartVestor.
The Ramsey Show question of the day is sponsored by Why Refi. You can't change the past, but you can change your next move. Why Refi helps people with defaulted private student loans refinance to a payment that fits their budget. Visit whyrefi.com/Ramsey. That's the letter Y, REFY.com/Ramsey, not in all states. Our question of the day today comes in by voicemail. So, Kelly, give it a play.
Hi, I have a question about jumping into investing at this time when stocks are trading so high. I have about $100,000 that I'm looking to invest. But I'm wondering if everything is so high, if this is a bad time to jump in. Am I just going to lose money? I'm a little bit paralyzed with regard to what to do with this money. It is all I have. I have no debt. I don't have a ton of property or anything. So this is my retirement savings at 65. Thank you.
Wow. Okay. Well, it's a good question. Thank you for calling in with that. We would tell you to sit down with a good Ramsey SmartVestor Pro, someone that we recommend in the investing world, and have a good talk with them and start to understand your options. But I can pan back a little bit and we can talk about the question in general. All right. In general, is it a good time to invest because the market's high? That's Sue's question, right? And so if you take $100,000 and you're afraid to put it in now because the market's high, you could lose money. What you're saying is, if you really believe that, what you're saying is that the stock market is never going to go up past where it is. And there's absolutely no data to indicate that. Data that indicates that the stock market has always gone up past where it is. Like always. Sometimes it dips down, but then it goes back up past where it was. 100% of the time it has done that so far. Okay? We've had some dips, but it always has returned and gone past where it was before. And so the only way that your fear comes true is if it goes down and stays down, which is the first time it would have ever happened in history. And what you're saying then is that the best and brightest companies in America that are publicly traded, names like Home Depot or Dell or Apple or McDonald's or Coca-Cola, names like that are not going to make more money in the next few years. They're going to make less money than they've ever made in history as a group. See, this is very unlikely. So I am 65. If I had $100,000 extra to put into something right now, I would not hesitate to put it all in the stock market in good growth stock mutual funds that have long track records today. I'd do it by nightfall, and I wouldn't even blink. Wouldn't bother me a bit, even if it was my last 100,000. Now, I'm not saying, Sue, you should do that because you have some fears, and those fears the way those fears go away is with a little bit of basic history and knowledge of the stock market. That's why you need to meet with a good advisor.
Yeah, there's a few questions here. Number one, should I invest when the stock market's high? Yes. Can you retire off of $100,000?
No.
I don't think so. And so I hope you have other income outside of that. But if you just pull up Google S&P 500 10-year, you'll see it go up and to the right, and you'll see some scary dips. But if you go back to, 2022, you'll see an all-time high of $4,700. Well, right now, it's trading at over $6,800.
6,800 points.
Yeah, 1,600 points. And so what you'll see is there's an all-time high every few years. And so you're actually buying it on sale today. Because if you look at 2029, it's probably going to be trading higher than it is in 2025.
Yeah.
So that'll give you some hope if you pan back like Dave's talking about and get that perspective. And a SmartVestor Pro can help with that.
Yeah, you can look at it and see how the market moves. The S&P 500 is an index that is the top 500 stocks on the stock market, and that basically is the New York Stock Exchange. Okay, so it basically is the stock market. And so if you follow that, you can tell what the stock market has done. The news often reports the Dow Jones Industrial Average, which is also an index, but it's just a handful of 30 or 35 stocks. It's not got anything. This has got the 500 largest companies. So it is the baseline of what we call the stock market, the S&P 500. So if you look at that and you can say, okay, is the stock market trading? Is it a bubble? Is it an illusion? There's no indication that it is, because every time there has been a dip that someone calls a bubble, or something, the market has returned. Because what we're saying here, this is not a fairy tale. It's not some kind of guy behind the curtain like the Wizard of Oz or something, right? This is actual companies. Home Depot. Does Home Depot make money? McDonald's. Do they make money? Do they make a profit? Dell Computers, Apple Computers, do they make a profit? And that's the stock you're investing in. A stock is a share of ownership. So if you're one of the owners of a company that's making a profit, your ownership share goes up in value. That's a share of stock. It goes up in value. And so when you're buying a mutual fund, it's got 90 to 200 Home Depot, Dell, and Apples in it. Exxon. Is Exxon making a profit? You stinking better believe it. You haven't filled up your car lately, have you? So, I mean, you bet these people are making a profit. You can bet. Are some of them losing money? Yeah, a couple of them are. But these companies as a group represent a big chunk of the American economy. And so in general, are these companies going up in value because they're making a profit and growing? And in general, yes. And in general, they always have. As a matter of fact, for 70, 80 years, the S&P 500 has averaged about 11.8% rate of return per year. That's the average, which also means some years it was less. Some years it was more. That's where we get averages from. Y'all remember the 6th grade, right? And that's where we learned how to average out something. And so that's, you can pull these things up, look at it on the internet real quick, but sit down with someone that can walk you through and you get comfortable. You don't do it because a couple of dudes on a podcast said do it. You sit down and you use your brain to understand something you never understood before, and then you go, wow, okay. So, George, here's an interesting thing. I never understood this, but there's something maybe psychological about it. I don't know. The stock market feels far away, sophisticated, and I can't get my emotions around the technicalities of it to feel whether it's going to go up or not. But you buy a home and you have absolutely zero guarantee that it's going to go up in value. And people don't think a heartbeat. They don't even think, they don't sit and go, I don't know. If I bought a $400,000 home, would it go up in value? People don't think that. That does not even enter people's minds. They go, of course it's going to go up in value. Because that $400,000 house, I remember 20 minutes ago, it was $300,000. Mm-hmm. And I remember 45 minutes ago, it was $100,000, And so I remember it. But I guess because we walk around in the midst of the brick and mortar and we watch this, if you're like 30 years old, you've had 10 years as an adult watching real estate go up. If you're 65 years old, for God's sakes, you have dinosaurs in your backyard, So, you've been watching real estate go up. And so you have this historical data just kind of stored in your head, although you don't have the actual math, but you feel very safe.
Yeah.
With real estate.
It's physical. You can see it and touch it, and the stock market is just charts, graphs.
It's like woo.
It's green and red on the news. That's all I know.
Yeah.
Talking heads are saying it went up. Talking heads are saying it went down, and so it doesn't feel as real. And I don't feel as connected to the stock market like I do my own home. Yeah. As it should be, but I still invest in the stock market.
The interesting thing is you're buying both based on historical data. Has it gone up in value in history? Am I going to lose my butt based on what it did in history? You're buying both of them based on the data, but people are just so much more comfortable with a home. And I'm glad they're buying homes.
Thanks for tuning in to Ramsey Everyday Millionaires. Need help with your investments? Connect with a SmartVestor Pro at RamseySolutions.com/SmartVestor or click the link in the show notes. Ramsey Solutions is a paid non-client promoter of participating pros. Learn more at RamseySolutions.com/SmartVestor.